Miller in our lives now. Matthew Miller, our co-anchor and good friend. He's a father, Tom. What a wonderful thing.
It is a wonderful thing, and the guy has absolutely nailed it because he's got the Kinderfreibetrag and the Kindergeld going here. Not only, you name the kid always, John, you name the kid always after the richest grandmother. I mean, that's a cardinal rule.
It's very smart.
Just, what you do. But John, what's so great about this is Lisa and I are slumming in America with no benefits. He's over there in the land of immediate child tax exemptions, and Lisa, the kid gets a child care allowance from day one. I mean, we would kill for that.
Yeah, here we have negative yields on children. They have positive yields on children, negative yields and everything else in Europe. That's what's, yeah. Well,
Look
maybe
at the Kindergeld.
Try to push me out there.
Kindergeld.
I think it's fair to say, given Matt Miller's spending on all things engine related, that this child comes with a negative yield.
Hey.
Lisa, can you imagine what this child's going to be driving?
The daughter was almost named Harley.
Yes,
what do you want to know? I mean, he wanted to go with Harley, and Mrs. Miller went mental and said, no way.
Congratulations to Matthew and Maria Miller and their newly born daughter. Coming up on this program, Mike Swab of Goldman Sachs, co-head of fixed income portfolio management from London and New York this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi says the chamber could pass a pandemic relief package this week. Still, a deal with the White House remains elusive, and the Republican-led Senate may not act before the election. Both sides accuse each other of, quote, moving the goalposts on the legislation. In the Senate, a final vote is set for today on Amy Coney Barrett's nomination to the Supreme Court. Confirmation is all but assured. Senate Democratic leader Chuck Schumer accused Republicans of using raw political power to get Barrett confirmed before Election Day. The British government is indicating it's optimistic about a trade deal with the European Union. The latest round of talks between the UK and the EU has been extended into the middle of this week. Earlier this month, Britain temporarily walked away from negotiations for a free trade agreement. And the parent of coffee and donuts chain Dunkin' is in talks to be acquired by private equity-backed Inspire Brands. According to the New York Times, the deal is valued at $8.8 billion and could be announced today. Shares of Dunkin' Brands have more than doubled since March. Inspire Brands owns Buffalo Wild Wings and Jimmy John's. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Keep moving the goalpost. We want it the sooner the better, and that's why we're making concessions. We're making concessions too.
We don't even have the bill yet because Nancy Pelosi, and she's coming up. I know she can speak to this, but we've continued to make offer after offer after offer, and Nancy continues to move the goalpost.
Back-to-back interviews on CNN over the weekend with Speaker Pelosi and Mark Meadows, White House Chief of Staff. I think that's the blame game. And again, how many times have we done this? It's boring, isn't it? Here's the equity markets. On the S&P 500, we shape up as follows. On equity futures, we're down 29. We're negative 0.8%. Bit into the bond market. We just give up some of that. We were down 3 or 4 basis points earlier on this morning. 0.1861% is your yield on a 10-year. More broadly, through foreign exchange, through G10, it is a stronger dollar story, including against the euro. Euro-dollar, 118.20. Tom Keene, shout out to our colleague Jen Jacobs down in Washington, who part-time seemingly is leading the track and trace initiative down in D.C., the latest being Mark Short of VP Pence's office. Just remarkable how some of these leaks are happening, Tom.
And more than that, more than the idea that Mr. Short, of course, so close to Vice President Pence in proximity, it's 5 people reported being ill around the Vice President as he campaigns, I believe, without quarantine and all the others. He's out there full force here in the 8-day dash. It will be extraordinary to see where we are 2 days from now and even 2 weeks from now. Kevin Cirilli joins us, our chief Washington correspondent. Kevin, I got 8 zeitgeist ways to go this morning. Let me go where Mike Allen is over at Axios. I want you to overlay these 2 big stories. Your conventional politics with a pandemic that's worsening. Mr. Allen goes to Montana and Wisconsin. How does the election change across the greater North, Middle West, and Mountain states?
It doesn't. You know, just in traveling the past couple of weeks, I think that there's a very different reality in those parts of the country outside of the coast where there's an acceptance of the virus and an acceptance of the risk that comes in terms of voting. You know, and just to note the trajectory, though, in terms of the polls and the early voting that we've seen in contrast with Democrats, you look at a state like Texas and Harris County by Houston, where Houston is, and the early voting there, the mail-in voting there has just skyrocketed. I mean, absolutely skyrocketed. I spoke with a Democratic strategist last night who said to me, the reason they're so bullish on Texas, which, you know, behind the scenes they're trying to quiet down some of the expectations, but it's Harris County. I mean, when you look at the early returns in something like Houston, and it's why Senator Kamala Harris, the Democratic vice presidential nominee, is headed to Texas, because they're thinking, all right, well, maybe we should do that. And there's a map of the early voting per state, and it's more than 6 billion upwards of in terms of how they're shattering records in a state like Texas.
But Kevin, we're all one big walking Cook political report. Cut to the chase. What did Kevin Cirilli learn about the 47 polls out there in the last 24 hours? What is your tendency, your knowledge right now?
Well, look, I think the biggest unknown, this is really what it is that the biggest unknown is whether or not the mail-in ballots it simply mean that there's blue voters. And so that's the biggest unknown. Because for as much as the president has criticized early voting, many Republicans are looking at the virus and are voting Republican, but are casting mail-in ballots for them as well. So, you know, it's hard for the pollsters and the data analysts to track whether or not early voting is going to necessarily mean Democrats. The way that they've been able to do it is by looking at traditionally Democratic-leaning parts of the states and suggesting that the early returns in those counties would mean a positive sign for Democrats.
Kevin, much has been said about the polls now and the polls back in 2016, but what we did see in the final 2 weeks of campaigning was some real momentum behind the president to close the gap right into Election Day. We don't see that right now, do we, Kevin?
Well, I think that they would say that they have it. Democrats would say that they don't. But to your point, in terms of the biggest unknown with regards to the flashback to 2016 and the Hillary Clinton emails and the letter that came out from Comey and whatnot, you know, that felt like a real a seismic jolt in the final weeks of the campaign. I will tell you that the president's campaign has seized upon some local issues such as energy policy. They are blasting that in Michigan, Wisconsin, and Pennsylvania. They feel that will be able for them to pick up votes on lost ground.
So it's not just the presidency, it's also control of the Senate very much at stake, and that's very uncertain. And actually, if you believe predicted, you can see a tightening gap there in terms of the odds that there will be this blue wave that's been increasingly priced into markets. What's your sense of this theme? Republicans say they are registering more voters, more men who are white and who have not gone to college in particular, more likely to vote red down the ballot. How much is that going to change the calculus in the Senate front?
That helps them in Florida. That helps them in North Carolina. That helps them in South Carolina as well. Whether or not you have to be, it's very hard to understand whether or not the getting people to sign up to vote is the same with voter engagement of folks that have already been brought in the 2018 cycle, because the Democrats would push back on that data and say, well, they've been able to mobilize voters ever since 2016. So these numbers are so hard because both of the political parties are operating under their own metrics and their own rubrics. So it's very difficult to understand from a comparative sense whether or not they're actually actual. In terms of the down ballot and the Senate and the blue wave, here's what I would say. Look, I mean, you look at the markets and how they've priced in and how they've started to recalibrate and associate Biden with certainty. You know, that's been quite interesting. And in terms of him being a little bit more predictable in his behavior geopolitically than President Trump, markets would view that as an asset. They would also view him much more to the center of someone like a Bernie Sanders. Beyond that, in terms of a blue wave, you know, we just don't know. And someone like a Senator Tillis, you know, I'm headed to Capitol Hill right after this. Someone like a Senator Tom Tillis, of course, there's the ACB confirmation hearing later this afternoon. All of those issues also playing, and quite honestly, playing in a mobilization effort from the left in many of the cities.
Kevin, you get to Capitol Hill. Great to see you, sir, this morning. Kevin Cirilli, Bloomberg Chief, Washington correspondent. Thank you, sir. Let's get to that poll just quickly from the Dallas Morning News that made so many headlines over the weekend. 46-44. Biden over Trump, a 2-point lead. And Tom, you've mentioned Georgia all morning. The average of polls basically has them tied. Yeah. That's the politics this morning. Let's get to a headline that crossed the Bloomberg just moments ago. Tom, I know you've been following this story. It comes from Ant Group and Financial, of course, and that much anticipated IPO, seeking to raise up to $17.2 billion in the Shanghai leg of the IPO. Should emphasize the last part of that headline, Tom. So this is $17.2 billion in the Shanghai leg of the IPO.
This is a movable feast, and it's pieced together, folks. And what's so missing here, of course, is Western capitalism. J.P. Morgan helping out on parts of this offer. But I like what the South China Morning Post says, John. They sum it all together with over allotment at a ginormous $319 billion. I'm rounding that up. That's a little bit of a statement there, but really something here to see how this sums together, John, away from Wall Street, away from the city.
Everyone wants to know, Tom, will you reduce the cash allocation and allocate a little bit of money?
I can't. I'm looking for. I need an entry point in China.
Of course. From London and New York, this is Bloomberg.
Entry point.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
From London and New York, good morning to you all. This is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keane and Elisa Bravis. I'm Jonathan Ferro. 2 hours away from the opening bell this Monday morning. 8 days away from wrapping up voting in an election in America. Here's the price action on the S&P 500. A gap lower overnight. We stay there. We bounce back a little bit. We're down 30 on the S&P 500. Week of losses last week. A few more losses this morning, seemingly. Down 0.9% on the S&P 500. Risk appetite taking a punch. The dollar catching a bid. Euro dollar down to 118.24. Weaker euro down 1/3% against the US dollar. And in the bond market, last week a sell-off. We add 10 basis points to a 10-year yield. This morning, a rally. We come down 3 basis points on a 10-year to 0.8128%. We have to do two things. First of all, a shout out to Kathy Jones of Charles Schwab,
Oh, yeah.
who just dominated last week's programming. It's the only thing I remember from last week was Kathy Jones playing the piano on this program. That says more about me than anything else. Kathy Jones also had this to say on the bond market, Tom. Let's take a listen to Kathy.
Playing piano, great.
We think 1% is probably the upper limit where we can go from here. I think at that point, the Fed might get somewhat concerned, and we might see some yield curve control or maybe a twist to put a cap on it.
And Tom, that was a take from many people last week off the back of that Treasury market sell-off. The question I asked repeatedly, and we all did, how self-limited would that sell-off be? When would the buying start to come back in? When would people start to worry about higher rates? This morning, the bid is back.
You know, our pride here, folks, is not a lot of hyperbole, and John's absolutely right. John, we're range-bound, and we're up at the higher end of the range until you see legitimate breakouts. The other way I would go, John, is to go to the dollar and looking at the Bloomberg Dollar Index, which is very, very good math. It's on support, and that's all it is. It has not broken through.
Dollar stronger this morning. I keep going back to the euro, Tom. The euro dollar at 118.
Fair.
Given what Europe is going through right now, I think it's really, really interesting to see the euro still north of 118. Europe, more restrictions this morning. Italy shutting things down, not completely, but in a bigger way. A curfew in Spain, an economy that had lost momentum going into all of this, and real pressure building on the ECB again. This coming Thursday, Christine Lagarde going into that news conference, Tom. I don't think it's an easy one for her. I don't think people expect her to do anything Thursday, but I don't think this news conference is an easy one.
Yeah, well, you know, very simple. Swedish krona stronger against euro, but within the range. It's not excessive. And, John, I would go from September through this October as being range-bound. I mean, our next guest is really good at identifying when you come out of those ranges, and we haven't.
We can bring Mike Swell in now.
Please bring him in.
Co-head of Global Fixed Income Portfolio Management. Mike, great to catch up with you, sir. I'm sure you heard a part of that. Can we just start with this 10-year Treasury range we've been stuck in for a number of months now, between 50 basis points and 95 at a high end in early June? Mike, do you think we've got the setup in front of us to break out of that?
Sure. First off, Jonathan, I don't think I can match last week's piano. My office is not large enough for a piano, but I could play a little kazoo.
I won't ask, Mike.
If that makes your week. In terms of the range on the bond market, I think that the death of the bond market rally has been just that story's been written way too many times. There's still yield, there's still balance in fixed income relative to equities and other risk assets. And as long as you have investors that are long risk assets and need some level of diversification, as long as rates are zero or negative almost everywhere in the world, the 10-year Treasury at 80 basis points offers, number one, balance for your portfolio and some hedge efficacy. And secondly, is there is yield in the fixed income market. And 80 basis points may not sound like a lot, but if it rallies to 30, that's a significant total return. So I think that people are writing off the bond market too early. And I think that right now with the 10-year at 80 basis points, there is value there with the Fed on hold for the foreseeable future.
Yeah, Mike, that's right where I wanted to go, is within the internals of the market. We do that in the equity market all the time. What do you see on your desks of the appetite and the bid-ask? I mean, there's a wall of money out there. I get that. But what are the internals you see in that bid, that demand for fixed income paper?
So we don't see a lot of the fixed income universe way overweight duration or way overweight treasuries. What we look at is we look at a lot of the funds that are out there and to see how much, where they stand relative to the benchmark. And you're seeing investors right now anywhere between flat and somewhat short duration. So that, from a technical standpoint, is a very positive technical for the bond market. I would say that the other very, very important point is kind of the volatility that we're seeing now in equity markets and that we're likely to see going into year end. It's likely to have a positive impact on the Treasury market as investors look for flight to quality. And in the near term, it may even have a positive tailwind towards the dollar as well as the flight to quality currency.
Here's what I'm struggling with, Mike. You say that there's probably going to be buying of treasuries, and yet I was reading your notes, and you're bullish on high yield. You're bullish on the riskiest credit. Isn't there a contradiction here that if people are looking for the safety of treasuries at sub 1% yields, why would they be confident that they're going to get any of their money back with a high yield bond?
Well, I would say, first off, there is a lot of merit to owning growth-related assets and things like high yield that have not benefited as much from the Fed coming in and buying everything in the investment-grade universe, buying treasuries and buying mortgages. They've kind of been left out there, and there's still a decent amount of yield in the high-yield market. The benefit of treasuries paired with credit is very, very significant. When you go long duration paired with credit, you actually create better balance in a portfolio. So in the event that there is a risk off, actually treasuries would rally. And in the event that there's a improvement in growth and treasuries may back up, you would see credit spreads tighten very significantly. So number one, I don't think that that's an inconsistency. Secondly, I think that when you invest in things like high yield and other fixed income related assets that are not treasuries or agency mortgages that are very liquid, you think longer term. And longer term, we do believe that you're going to have improvements in care for COVID. We're going to get back to better growth next year. And so as a result, you want to stay long growth related assets. But as we look at what's setting up right now in terms of the potential for election volatility, the potential for funding issues at the end of the year as banks are not in a great capital position to be able to provide a lot of liquidity to markets, we actually want to be in a position where we have a little duration going into that, but you're also in a position where you have dry powder to take advantage of dislocation coming at the end of the year.
Oh, hold on a second. Let's unpack some of that. You said dislocation into the end of the year. In other words, you're expecting some of the riskier credit to potentially sell off and potentially significantly heading into year end, and then you're going to be buying. What's your entry point?
So I'm really trying to divide the fixed income universe into two. One is the credit-related assets where you're relying upon growth improving next year, earnings improving on the margin, and just getting paid back. And in trading credit, it's very hard to jump in and jump out pre-election, post-election, going into year-end. So long-term, we still very much like owning credit. In the very near term, though, we look at factors like volatility. And so we look at VIX, we look at bid-offer spreads, as Tom was talking about earlier, and we get a little concerned that there's going to be volatility going to the election, and there's likely to be volatility going to year-end from a funding standpoint. So what we've done is instead of reducing positions in credit-related assets, which are going to be dependent upon growth and longer term, we're trying to free up balance sheet and portfolios to be in a position to take advantage of dislocation. And that may be even things as basic as cash futures basis in the treasury market, something that blew up during the COVID crisis, blew up in previous funding crises, where you can earn very, very attractive returns by deploying your balance sheet.
On radio and television this morning, our simulcast, Michael Swell with us with Goldman Sachs out of Brandeis and LSE a few years back. Mike Swell, right now, what Lisa and I know with John Farrow is interview after interview, everybody says they're buying China debt. All my radar's up just because everybody seems to be in the trade. What's the risk or what's the thought you have on what could be out there in 2021-22 for the certitude of owning China debt?
Well, I think you have two factors that are a risk to owning Chinese debt. One is the risk that growth and that the Chinese economy is very insular and continues to recover at a pace very different than the rest of the global economy. In the event that that does occur, that could create a situation where the Chinese central bank provides less accommodation, and you actually see rates rise and inflation pick up in China. That's a real risk. The other risk is that from a credit standpoint, people get concerned again about China, kind of the other side. And while the central bank has the ability to lower rates, you could have a situation where there's credit concern. I think that's less of a concern. In the end, rates are attractive in China. Rates are in the 3.25 area. They're meaningfully higher than they are in the rest of the globe. We don't expect to see inflation running away in China. And so the real rate in a country like China is actually somewhat attractive. I'm not overly concerned. That doesn't feel like a crowded trade. There aren't a lot of investors that have the ability to be able to invest in China debt that you're overly concerned that it could be one of these crowded trades, but obviously watch pretty closely.
Mike Swell, I got a question. You were a ginormous basketball player at Brandeis. Did you really cut practice once because you wanted to go see Al Gore? Did you really do that?
Oh my God, you really did your homework. That was from 1980, the 1988 election, And actually, it was true. I actually worked on one of the presidential campaigns and was very active and involved. There were about 8 Democratic candidates at the time, and I actually did go to the coach, and the coach rolled his eyes and said, "We don't do that here. We're here for basketball." And I said, "Coach, no, I want to see Al Gore. I want to hear about that new Green Deal." 35 years ago, before the Green Deal was really a thing, and so actually it is true.
And John Farrell, I would say that Brandeis basketball back then was the real deal. Were they doing Final Four? No, but it was the real deal. Very competitive program.
I would love to know what David Solomon would have to say if Mike gave him a quick call and said, "I want to go see AOC and talk about the Green Deal." Mike, you won't answer that one, Mike. Don't worry. Right.
John.
You don't have to answer that one.
Get him in trouble.
Mike Swell.
Appreciate that.
Goldman Sachs. Thank you. Thank you very much. Let's get to the bond market just quickly. 2s, 10s. We talked about this chart last week. We've topped out at about 70 basis points twice now in the last 6 months, and we've done it again. Seemingly, we've almost done it again anyway, Tom. Last Friday, breaching that level, and then we roll back over again, and we keep talking about the potential limits of this sell-off on the long end, and to some degree this chart speaks to that, Tom.
Yeah, absolutely. I mean, it's just uncertainty out there. Let's be honest, and as so many people said, Marty Schenker was brilliant earlier, that, it's about the presidential election, yes. But, John, the uncertainty here about a president with a Senate on the same side or a president with a different party Senate is really the key issue.
Much more still to come on Bloomberg Surveillance. Coming up next, Lawrence Gostin, Georgetown University professor from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz. With futures down 30 points, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi and the White House accuse each other of doing the same thing when it comes to a pandemic relief plan, and that is, quote, moving the goalposts when it comes to what's in the actual legislation. Pelosi says the House could pass a bill this week. Still, an agreement with the White House isn't certain, and the Republican-led Senate may not act before the election. Joe Biden calls Republican questions about his son Hunter's business deals a smear campaign. The Democratic presidential candidate also told CBS News that the release of documents allegedly belonging to his son may have been part of a Russian disinformation campaign. Biden's claim has not been substantiated. And more deliberate blackouts in Northern California. The state's largest utility, PG&E, cut power to 1.1 million people to prevent live wires from falling into dry bush and starting wildfires. Winds as high as 50 miles an hour swept through an area north of San Francisco. The blackouts may last until tomorrow. And Ant Group is now on course for the biggest IPO ever. The fintech company, founded by billionaire Jack Ma, has set the prices for the dual share listings in Shanghai and Hong Kong. Together, they would raise about $34.5 billion. That would surpass Saudi Aramco's record $29 billion share sale last year. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Many of our greatest companies and labs are coming out very quickly with the vaccines. They're doing great, very shortly, very quickly. It's going to be delivered fast. That will quickly end the pandemic. It's ending anyway. We're rounding the turn, but the vaccine will get it down fast.
They didn't tell us about the virus. The administration gave Wall Street investors no heads up. He didn't tell us. He just told his Wall Street friends, and that's why they made so much money by, quote, selling short in the market. They knew what was coming. But what happened to the rest of us?
President Trump and Vice President Biden holding rallies over the weekend with 8 days to go. Over the weekend, Tony Fauci speaking to the BBC, seemingly backing the president's timeline for a vaccine, Tom, saying the following: "We will know whether a vaccine is safe and effective by the end of November, the beginning of December." That's Tony Fauci there, the National Institute of Allergy and Infectious Diseases director, speaking to the BBC over the weekend, Tom.
Very good. And Mr. Fauci, of course, always controversial. Right now, to dive into this, and we could literally do a one-hour conversation, maybe split it down the middle on pandemic and also on the Affordable Care Act, is Lawrence Gostin, Georgetown University professor. His claim, folks, is real simple. Other than the great Uwe Reinhardt at Princeton, nobody owns a high ground on public health like Lawrence Gostin. Even his harshest critics always read and always listen to Professor Gostin. Thank you so much for joining us again. Sir, I want to go to the Affordable Care Act, and I heard one line from the president, I believe it was in the debate, I can't remember in the blur, but there was that classic Republican, ancient conservative line on socialized medicine. If we do this, if we do that, this will be an America of socialized medicine. Where did that train of thought come from?
You know, I just think it's political. I just think it's just it's a political talking point. It's not socialized medicine. It's far from it. It wouldn't even bring us close to what is in Europe, the National Health Service, the German system, or the Japanese system, you name it. What it does is it's still a predominantly private insurance market, overwhelmingly so, still mostly employer-sponsored health plans. But there would be a public option, which just means that if somebody wanted to, they could sign on for their public option. Same way you could sign on for Medicare or Medicaid. So it's basically one of the options in a really discombobulated American health system. But I think it'll drive down the uninsured rate for sure.
I mean, if we have 85% insured, 15% uninsured as a general rule, the great fear of the core Republicans and even those in the middle is they're going to end up paying for the medicine of the 15%. Is that where we're heading in 2021?
No, I don't think so, because there's no evidence of that. There's really no evidence that there's a cross-subsidy from our private insurance system now to our public systems, whether it be Veterans Administration, Medicare, or Medicaid. No, you don't really have any kind of cross-subsidization. What you do have is a cross-subsidization through the whole market, and particularly in the private insurance market, that the young and healthy, they cross-subsidize the old and the sick, and that's the way insurance is designed to be.
So, Professor Gostin, as we talk about the infrastructure of healthcare in the United States, it's important to take a look at the rollout of the vaccine. People pinning their hopes on a vaccine, and yet the more that I read about it, whether it has to do with the rollout, whether it has to do with the efficacy of said vaccine, whether it has to do with dosing and who gets what when, this is incredibly complicated. How long is this going to take before we can actually count on some sort of herd immunity or actual effect to stop the pandemic?
Yeah, you've really asked just exactly the right question, because, you know, Tony Fauci, and Tony and I go back many, many years. He's a very close friend. He's got great judgment. Said that he was going to, we thought we would know whether we had a safe and effective vaccine by the end of the year, this year. And, you know, we will. We probably will know. But that's just really, that's really the race, the gun that's shooting the race off. What we really need to know is when that vaccine is going to be delivered and taken by the population. I don't foresee that, and neither do my colleagues, until the second or third quarter of the year. There are monumental problems that we've got. It's going to require 2 doses. We don't know how effective it's going to be. It might be more like an influenza vaccine, which is not fully effective. So it's not going to make the COVID go away. There's no way that's going to happen. We're probably still going to need to distance and mask up for a while. So I don't see herd immunity coming, certainly not in 2021. But I think, you know, by the end of 2021, we'll be rounding the corner, and that's what I've always predicted based upon historical evidence of other pandemics about when this pandemic is going to end. But we'll still live with COVID. I mean, it's here forever. But I think it's going to be something that we'll be able to manage, go back to normal.
Meanwhile, Professor Gostin, we are at a tipping point, a lot of people say, as the number of cases spikes upwards. Yeah. Talking about the exponential factor of this disease, what's your biggest concern right now heading into the winter months?
Well, you know, I'm worried that there's going to be an escalation. You know, if you think about it, you know, I've been saying, and so have many of my colleagues, that you know, it's not too late in the United States. You know, we can still do the right thing. We can still get our testing regime up, our contact tracing. We can still have universal masking and social distancing. We can do those things, and we can dramatically move the needle down. But it's become painfully obvious to me we're actually not going to do that. We've been saying it now for 9 months, and there's so many conflicting messages out there from the top down that, you know, it's clear that the population isn't going to do it in the numbers that we need to in order to make a difference. And so I foresee continuing rises all winter as we're kind of moving indoors. We've got family gatherings. People are going to have pandemic fatigue, go see friends, go to the restaurants, and even the bars. And so the vaccine's going to be needed. You know, we're going to have to wait for the cavalry. We're going to have to wait for treatments like monoclonal antibodies, which the president got to go mainstream. And you know, sadly, it's going to be a blazing fire until the cavalry come.
Professor, appreciate your time this morning. Please come back soon. Lawrence Gostin there of Georgetown University. Thank you, sir. The confusing messaging around masking, Tom, at the outbreak of this virus, when it really started to spread through the United States through the spring, still seemingly struggling to get that message back on track. That was a mess. And I think when we look back, for whatever it's worth right now, I'm not sure it's worth much, but when we look back in years to come, I think we will look back at that moment as one of these moments. This really got messed up.
Well, messed up right now, too. That interview we did, I'm going to say 10 days ago with Dr. Murphy of Northwestern University, was heated about the mask factor in this explosion of cases and hospitalizations that we see in the northern Midwest. So, I mean, that was just one of the conversations that we had on that.
End of 2021. That's my takeaway from that conversation.
Yep.
April became May, June, July, August, then the end of 2021.
Where are we looking to now?
Coming up on this program, Greg Peters of PGIM Fixed Income from London and New York this morning. Good morning. Futures down 1%. This is Bloomberg.
Would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
much less leverage in the equity market.
This is a market that's thinking at some point stimulus is going to happen.
We have just huge levels of debt, and we don't want to get into a debt trap.
The Fed has a lot of upside to accelerate. I think they're going to maintain this pace.
We are having this income cliff at a time when actually the consumer is supposed to go out and spend.
COVID is the great unequalizer. The strong get stronger, the weak gets weaker.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. In 8 days, an election. It is truly an 8-day week across this nation, and indeed those watching around the world. And John, the confluence here this morning, I mean, futures off 33, I get it, risk off, but the confluence here of really grim news worldwide in the pandemic, along with major uncertainty on the United States Senate elections, makes for an interesting Monday.
Couldn't agree more, Tom. And the complexion, the composition of Congress, all about what happens next with fiscal stimulus for market participants. Right in front of us now, though, playing out for everyone to see, the increase of infections in the United States, in Europe, and the extra restrictions coming down in Italy and Spain as well at a time when this economy was already losing momentum. So this morning, what have you got? An equity market that gets hammered in Europe, and equity futures on the S&P down almost 1%.
Okay, but John, this is important, and folks, full credit. I hate to say this because John's only with us for a brief hour today on Bloomberg Television, but John, the basic idea that I have is that you were way out front on this. I guess if I'm an SAP shareholder, which I'm not, I'm a little surprised off where it was Friday at craters in Germany, and you pull that over to what Lagarde does at the European Central Bank. She's got to worry about uncertainty and declining aggregate demand.
SAP, software company, cutting its outlook. That's never good, is it? It's not even a big cyclical name, Tom. It's not even a big industrial name on the DAX. It's a software company, and it's cutting its outlook because business spend is uncertain. The outlook for this economy is uncertain. You bring up President Lagarde, the ECB chief, this coming Thursday. Look, for what it's worth, I don't think people expected to do anything this coming Thursday. But wow, is the pressure building on policymakers in Europe to do more, to insulate this economy? I think the good news this morning, take a look at the Italian bond market. It's solid. It's resilient. And that tells you this is about concern about the European recovery, not so much about Euro breakup. And this time around, we're not conflating the two issues, and that's good news because right now, that's the last thing Europe needs.
Futures here, -3, or into 3 basis points rather on the 10-year yield, 0.81%, and you really don't see that in Europe with Swiss 20-year not doing what we see in the United States. Lisa Abramowitz, before we go bond talk here with Greg Peters, let me ask you rather about full faith and credit versus what you read over the weekend on IG and on high yield as well.
Well, people are bullish. I mean, we heard that from Mike Swell of Goldman Sachs going further into high yield debt. My question to John's point about the rising virus count, we have a bridge to the other side, but the other side is getting further away, possibly the end of 2021. How much bigger does that bridge have to get? How much longer? And if it doesn't, what happens to all of these companies that are having to ratchet back their profit forecast, Tom? An important question.
And I'm going to do this. This is totally idiosyncratic. This helps out Lisa with her morning drinking game, which is on Turkey and Erdogan. We've got a set of headlines coming out from Mr. Erdogan, and this follows off the argument with the French over the weekend. Turkish President Erdogan urges boycott of French goods. I mean, it's as simple as that. And lira blows out 8.08. John, this is an unraveling. I mean, John, to you in London, is this completely idiosyncratic, or does Turkey roll over into other challenges for NATO, for Europe as a NATO member?
Well, a couple of things going on here, Tom. Of course, France recalling its ambassador to Ankara over the weekend, and this has been boiling up for quite a while with the tension between Armenia and elsewhere, Tom. And in the FX market this morning, though, I would say this is not just idiosyncratic Turkey. I would say you've got a much stronger dollar. You see that against the South African rand. This is the last thing Turkey needs. The problem that Turkey's got, the biggest issue, I think, is faith in policymakers to do what market participants believe is the right thing. The right thing to do to respond in a crisis. They lost that capital a long time ago, and they've never really been able to build it back up.
And this is great. Greg from Newark, New Jersey emails in and says, Tom, talk log dollar lira. So we're going to talk log dollar lira right now, and all you need to know is we're out over 2 standard deviations weaker on that move to 8.08 on Turkish lira. Right now, to get things started, Gregory Peters joins us. He's with PGIM, with real portfolio management, money at risk, fixed income, head of multi-sector and strategy, and he's won a trophy set of awards over the years and all that as well. Greg, I love what you say. This is a market assisting bondholders and not stockholders. What do you mean by that? That policy and all of finance and capitalism's working for bondholders right now?
Yeah, so I think we're in this environment still, and we're talking about the path of the virus and rolling shutdowns and pullbacks and fiscal stimulus. I think what that really does at its core is really keep companies conservative, right? And being conservative benefits bondholders over equity holders. And so what you're continuing to see are companies worried about the path of the virus, rightfully so, and so they're retrenching. And so you're not going to see the same type of activity where bondholders are put to the side and equity holders are put forward. So I think that's the environment that we're in. I know it's perverse, but that's bond market investing.
Greg, we've seen some huge bond issuance, some huge bond supply through 2020, through this pandemic, from both investment grade and high yield. Can you draw a distinction on what that money's being used for this time around and whether that plays into the argument you're making?
That absolutely plays into the argument. So at the surface level, you see the headlines of all this issuance. It's somewhat scary. But then when you look a little deeper, what you see are that companies are actually terming out their existing debt at lower coupons and paying down their higher coupon short debt. So in effect, what they're doing is that they're putting their balance sheets in better shape, not worse shape. At the same time, they are preparing for additional liquidity measures. And so those two things put together, I think, put bondholders in a better place, not a worse place. So it's really what you're using the proceeds for. It's not like you're using the proceeds like you have in the past to buy back equity. Right? So you're not doing that. And I think that intent and that purpose really benefits being a bondholder in here.
Greg, the credit market, not a monolith. You've got investment grade corporate issuers perhaps doing what you say. On the high yield side, I've read an increasing number of articles about PIK toggle deals. Basically, if they don't want to pay their interest, they just put it on their debt balance. You see also dividend recapitalizations, basically private equity firms having their portfolio companies borrow more money to give them a payout. How does this fit into the conservativeness that you're talking about?
Yeah, so I think you're always going to see that type of transaction, but it's not really happening en masse. And so you can always pick to a certain deal that happened that's maybe pushing the limit, but it doesn't really tell you the broader story. And the broader story is the one that I just described. So I think that's the important piece of the puzzle. Don't get drawn in by these idiosyncratic kind of news stories. The broader story is one of balance sheet repair, and I think that's the driver.
Let's push the politics through this conversation as well, Greg, going forward. Sector to sector, what you're looking at the moment and the kind of permutations that you guys are all talking about at PGIM as far as the election is concerned.
Yeah, so the election obviously is at the fore. Really, it boils down to what's the new regulatory construct and the tax construct. And so, look, I mean, I think it's still worthy of kind of examination, but I just say a couple things. First and foremost is that I do think if you do have this kind of blue sweep that seems to have really captivated the market in here, that does benefit the consumer as it could kind of fuel continued kind of wage growth and just economic growth. But the one area that we see differently than maybe the equity market and some other areas is the financials. So to me, it's really hard to see a situation where there could be much more regulation to damage kind of the ability for financials to operate. So my comment has been it's hard to kill the patient twice. And so I think it's really a pretty benign environment, all else equal, if there is a leadership change on the financial side. And then finally, on the energy front, this is highly controversial. Many investors are looking at energy. Obviously, it was the center of the last debate. But the truth of the matter, the energy companies haven't really benefited either equity holders or bond holders over the past several years. So some kind of change and alteration in the spending mix and maybe being less profligate isn't such a bad thing. So I'm actually pretty excited over the alpha opportunities within the energy space going forward.
Greg, the great understanding is that bonds as a hedge don't work anymore. So I got to go find something else, whether it's preferred, bank preferreds, et cetera, or 47 other intangible assets as well. Is that going to happen? I mean, a bond is a bond. A fixed income as a hedge is just what it is, a predictable stream of cash flows. Can there be an alternative?
I think there can, but it's way too early. So I agree with Mike Swell, who was on previously. I think it's way too early to call the death of the bond market. But this is really picking up steam as a story. But I mean, we're in an environment where real yields are negative, right? So the fact that you're getting 70, 80, 150 basis points, depending on where you are in the curve, matters a lot relative to that. So I still think bonds add a lot of value to the portfolio. And there's a thing called risk adjustment. So you are, getting a return for a lot less risk, and I think that matters. So there's this big storyline going on around the death of the bond market and 60/40's dead. I think it's way too early for that. And bonds do what they're supposed to do. You see it today, and I'll believe you'll continue to see it. So I'm so bullish on the outlook for bonds, and in fact, I mean, I think it's going to be somewhat volatile here over the near term within a confined range, but I think the back end of the curve has actually value here. And so we're actually pretty constructive on the level of yields in the U.S. bond market.
Greg Peters, bond specialist. Bonds aren't over. Greg Peters of PGIM. Great to catch up with you, sir. As always, thank you. That's my only dig. It's a light one. Greg, great to see you, sir. This coming from Jonathan Swan of Axios, catching up with Ted Cruz after the Trump-Biden debate. Ted Cruz saying the following, Tom, very short line. I'm very worried about the debt. Now, on the surface of things, of course, we can poke a lot of holes in that statement, but it's interesting to see where this Republican Senate is going to be heading in the next few weeks, even after the election, and what Republican senators sound like when it comes to the issues of debt, Tom.
Well, there's two things. There's debt and deficit. Those are two separate things, and all we know is they're both going in the wrong direction.
From London and New York this morning, good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi says the chamber could pass a pandemic relief package this week. Still, a deal with the White House remains elusive, and the Republican-led Senate may not act before the election. Both sides accuse each other of, quote, moving the goalposts on the legislation. And President Trump's chief of staff, Mark Meadows, says the U.S. is not going to control the pandemic. Meadows told CNN the government's response will be focused on vaccines and treatment, not containment. Meanwhile, Vice President Mike Pence's chief of staff and 2 other staff members have tested positive. Pence's latest test came back negative. In the Senate, a final vote is set for today on Amy Coney Barrett's nomination to the Supreme Court. Confirmation is all but assured. Senate Democratic leader Chuck Schumer accused Republicans of using war political power to get Barrett confirmed before Election Day. And Ant Group is now on course for the biggest IPO ever. The fintech company founded by billionaire Jack Ma has set the prices for the dual share listings in Shanghai and Hong Kong. Together, they would raise about $34.5 billion. That would surpass Saudi Aramco's record $29 billion share sale last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Particularly, sort of the technology landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Moving much right now. I mean, the two sides are still talking. The clock is ticking, as you know. Be very difficult. Even if you had a deal the next few days, I don't want to predict anything. I'm just saying there's more agreement than there was a while back. There are still policy disagreements.
Larry Kudlow there, National Economic Council Director, catching up with us to close out last week. Coming into this week, no talks about talks this Monday morning. Good morning to you all. Here's the price action on the S&P 500, a gap lower, maybe possibly off the back of the fact there are no talks about talks. That's Lisa's favourite line. Futures down 36. Negative 1% on the S&P 500. The bond market with the bid yields in 3 basis points to 0.81%. Just got to say, Tom, on two big issues between the administration and Speaker Pelosi on liability protection, on state aid, just doesn't seem like we've moved the dial on that at all in the last 30 days.
No, absolutely not. It's not there, and it's not there for state aid or city aid. And it's not a shock here. It is political, which is what you get 8 days to an election. On the political, on a careful analysis of all these policy decisions, Jacob Parakilas joins us now with LSE, their ideas, where he is an associate. Jacob, I want to talk about the election, and as John mentions, policy forward. What kind of gridlock is the next gridlock? Trump presidency, Democratic Senate, Biden presidency, Republican Senate. Define that gridlock.
Well, I think you're more likely to see a Biden presidency and a Republican Senate. It's very hard to imagine an electoral map that would produce a re-election for the president, but a Democratic Senate majority. I think if you do end up with a Biden presidency and a Republican Senate, the gridlock is going to be, in the first instance, about personnel. The Republican Senate is not going to have much interest in confirming Biden's first choice for a lot of his economic policy positions. You will probably be able to get through. Biden, I'm guessing, is going to have sort of relatively establishment choices for foreign policy and defense posts, and I suspect there will be enough Republican sort of acquiescence to the idea that those are fundamentally important for national continuity that those people will get through. But there will be huge dissension over economic policy posts, everything from Secretary of the Treasury down to Fed board posts to people in sort of assistant secretary roles at Treasury and Commerce. And then that's before even getting to the question of stimulus, which will be, again, a huge gridlock.
But well described, and I bring this up, Jacob, because so much of this is about the gridlock and the anger of all Americans that nothing's getting done in Washington. I mean, frankly, Mr. Trump campaigned on that in 2015. The level of anger in this nation, can a gridlock Washington deal with that? I don't see it.
No, I mean, I think there needs to be a fundamental change in the relationship between Congress and the White House. It's become extraordinarily dysfunctional, except in situations where you have a Congress wholly controlled by the same party as the White House. And even that, we saw that in the period from 2017 to early 2019. Even that doesn't produce the kinds of results in terms of new legislation, in terms of filling vacant positions in administrations. I think a Biden administration and a Democratic Congress would probably have lesser and certainly different problems than the Republican administration and the Republican Congress that we saw. But that's not to say that it would magically fix everything. There would be other issues, particularly since obviously the economic and social circumstances of America circa 2021 are dramatically worse than the circumstances circa 2017, 18, 19.
Jacob, are you anticipating any parallels to the situation coming out of the last financial crisis, or do you anticipate something marginally different?
I think it will be, obviously everyone has had the experience of the 2008-2009 crisis, not least of all Joe Biden. I think everyone has sort of looked at that and tried to come up with solutions and responses to the things that didn't work with the stimulus package and the sort of slow, grinding recovery that took place after the 2008 collapse. Again, a lot of this is dependent on Biden having a relatively friendly Democratic Congress to work with, and the Democrats in Congress being willing to, go along with the administration's initiative, which is not a given by any stretch of the imagination. I mean, a Democratic Congress, assuming a Democratic Senate next year, you will, under any circumstance, have a much smaller majority, but also a more or less more ideologically narrow caucus. The Democratic Party in general has moved not as far to the right as the Republican Party has moved, but significant to the left. And the most moderate members are not as conservative as the most moderate members of the Democratic Senate in 2009. So I think you'll see a little bit more ideological coherence, but there will still be debate over the appropriate amount of aid going to the entertainment industry, for instance. That's something that some states have an enormous interest in, and other states it's more peripheral to other issues of state aid.
Jacob, one aspect that you pointed to was that if Trump loses, there is no chance of some sort of fiscal stimulus getting passed before Biden takes office. If Trump's reelected, that means that he will pass something, and is a higher likelihood, but that it would be targeted to states that supported him and not those that were against him. Can you talk about how that will play out in terms of the economy?
I think what he would seek to do, what he's set up as a possibility, is that aid to states would be conditioned on reforms in states that have resisted some of his immigration policies, some of his economic and social policies. Typically, it would be saying, California, New York, you will get aid, but you have to get rid of sanctuary cities. You have to be more draconian. You have to, sign a pledge saying that you won't ever reduce law enforcement budgets, that kind of thing, which would be an incredibly difficult pill to swallow. Of course, the irony, especially with law enforcement budgets, is, if the state aid doesn't come through, those budgets will be slashed anyways, because states are going to have to start making incredibly difficult calculations, and there's no way to maintain the same level of spending on everything, including law enforcement, as has been the case up until now. So I think states have some leverage to push back, but obviously not as much as the federal government. At the end of the day, the federal government just has much more leverage in this. And if Trump wins, even if he squeaks through, I think, you can imagine a Biden squeaking through or a Biden landslide. Given the polls, I think it's impossible to imagine a Trump landslide. But, if he squeaks through, he will act as though he has unlimited political capital. And I think that'll set the boundaries very strongly of what that aid package looks like.
Jacob looking out 8 days and beyond many years. Jacob, fantastic to catch up with you, sir. Jacob Parakilas there, LSE Ideas Associate. It's the price action. Can't get away from this right now. A bit of a sell-off, 1 hour away from the opening bell. Equity futures down. Dollar lira, Tom, with an 8 handle. Just wow. Here's a headline from the Turkish president, Tom. The French leader needs a mental check. Seeing a lot of that recently, aren't we?
We are. I believe Mr. Macron commenting on that this weekend to Mr. Erdogan.
From London and New York this morning.
Actually,
Good morning.
Pharaoh commented on that about Mr. Keane.
David Page. I usually do that in a commercial break, Tom. Not live on air. But I think people know.
Thank you.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
From London and New York, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. 60 minutes away from the opening bell this Monday morning. Just a little bit of risk aversion to kick off the trading week. A week of losses last week. We add to that, we're down 34, we're negative about 1%. Losses across the continent as well. Dollar stronger, euro weaker. Euro dollar still just about above 118 at 118 and around about 20. In the bond market, there's the move for you. The bid is back, down almost 4 basis points on a 10-year to 0.8060%. Quite clearly, one of the big stories around the world, in the United States and Europe specifically, has been the increase of infections of COVID-19 and the additional restrictions we're starting to see from some of the biggest economies on the continent. This is what Mohammed Al-Arian, Queen's College Cambridge president, had to say.
Going on, and we will see more and more dispersion going on, because in the West, we are not doing a great job of living with COVID, and COVID is the great unequalizer. The strong get stronger, the weak gets weaker.
And that has been the story through the last 9 months, Tom Keene. Is it going to change? That's the question going into 21.
Let's make very clear here, folks, for those just getting up to speed on a Monday, there has been a massive change over the weekend in pandemic dynamics. That does fold into, of course, GDP estimates. Some of that, the shock, say, in Germany today that we saw was software provider SAP down large. David Page joins now with the French insurance giant AXA, where he is head of macroeconomics. David, a perfect day to speak to you. What does your fourth quarter shape up as? U.S. GDP, EU GDP. What does the final 3 months of 2020 look like?
So for us, we've been spending the last sort of 4 weeks really downgrading that outlook for Q4. I mean, Q3 still looks good. Q4, we've been reducing. So in the US now, we've got a quarter-on-quarter view of just under 1%. We're looking at about 0.8% coming in for that final quarter. Of course, it does depend a little bit on the momentum coming out of Q3. We'll learn that towards the end of this week when we get the Q3 numbers. But for Europe, perhaps even a bit softer. I mean, obviously, Europe is really the epicenter of this re-emergence of the virus coming through now, and we are seeing restrictions being reimposed. So we're seeing growth that could come in almost close to flat. Now, you know, we're not looking at contraction coming through, so there's some relief there. But, you know, these economies are desperately weak. We've seen huge drops in output in European economies in the second quarter. We are expecting pretty strong rebounds in Q3, but we should have been seeing ongoing growth coming through. And if we do get something that's closer to zero across European economies in the fourth quarter, that suggests, you know, a pretty soft backdrop for 2021. And it suggests that it's going to be difficult to get the people back in jobs. You know, the unemployment rates are going to be trending higher.
David, so much of this is the great divide between American finance and economics, which is sort of growthiness and percent change, versus the level that I see in old world economics. Carl Weinberg mentioned this earlier this morning. What is the level that you see of growth and all these other trends out 36 months or 48 months? Do we get back to normal, or do we level out at a lower range?
I think we're still rising. I mean, our projection is not that we level out at a lower range, that we're sort of trapped in a sort of somehow glass ceiling that stops the level getting back. It's just that we've dropped so far that even with these large pickups coming through, the level is still far short of you know, even where we were at the start of 2019. At the end of 2019, and of course that's not where you've got to get back to. Normalcy isn't about getting back to the end of the 2019 level. It's about re-establishing the trend growth that's emerged over that period, and that's going to take a long time. Now, there are a lot of unknowns. What we do know is that the economies aren't going to get there on their own. The monetary policy authorities are continuing to provide a lot of stimulus, so that will give some tailwinds to growth. We are expecting fiscal, I mean, when we're seeing fiscal stimulus across the Eurozone already being extended, we're expecting that to come through in the US under any electoral scenario. We do expect another short-term stimulus package to come through, but there is a prospect under certain electoral scenarios that you'll get a medium-term boost come through as well. You know, obviously Biden with control over the whole of Congress, or perhaps a little bit more unlikely, President Trump in a second term with complete control over Congress, would probably be able to put through some medium-term fiscal stimulus. And thirdly, you know, what markets have been looking for some time is a vaccine. And, you know, looking at next year, one would have to suggest the likelihood is we will see a vaccine start to roll out, and that will have a positive impact on the economies. So all of these things are going to give the economies some further impetus, but they really have a lot of ground to recover.
David, every crisis that we've come out of in the last 20 years, trend growth has been lower. Our tolerance for higher interest rates has diminished, and the ability of central banks to stimulate us out of this mess has been eroded. Bob Prince of Bridgewater spoke really eloquently about this last week. When you look at Europe right now, David, even before coming into this, trend growth was just about 1%. What's trend growth going to be coming out of this?
Well, I think there is a fundamental mindset shift that is going on now, and we are starting to see European leaders talking about how they're going to stimulate the economy over the medium term, how they're going to provide governments spending into sort of clean energy, and areas where you might see some infrastructure boosts, some large multiplier come through, and hopefully some productivity lift. And ultimately, that's what we're talking about. I mean, part of the reason we've seen trend growth lower is because the labour force growth has slowed over the last 20 or 30 years in ageing societies, and that process is ongoing. So the only thing that governments can really do, economies can do to address that, is boost productivity. Now, that hasn't happened over the last decade, but I think going into this decade, Europe has some hopes that it might, and we are starting to see a European Commission that's mutualising some of its support to the economies, and that will help that process come through. So there is a little bit of hope that we shouldn't see this sort of ever-softening trend growth come through from Europe. And I think, in certain electoral scenarios, there's also that hope for the US as well. The Biden proposals, for example, are very progressive, and, might help boost longer-term trend growth in the US as well. But as we know, it's difficult to know at this stage exactly whether they will be enacted and over what time frame. But I think there is some hope that we may not repeat this sort of continual downward trend in trend growth. But population growth slowdown is a key part of that, and that's going to be ongoing, particularly in Europe.
David, to build on what John was talking about, the Bob Prince interview that he did of Bridgewater last week, he noted, Bob Prince that is, that China didn't have to borrow the trillions and trillions of dollars that the U.S. and that Europe did just to plug an economic hole, because China dealt with the virus that much better. That will put China in a better position, less hampered by all that debt, to move forward. Do you adhere to that idea that possibly people should look more to China because they handled this crisis so much better, that they are in a better shape to plow forward at a faster pace?
Yeah, I mean, to some extent, that's absolutely right. I mean, certainly China and much of the Far East has handled this in a much better way, and therefore the economic impact that they're going to swallow is much less, and therefore the sort of the debt that they rack up to try and account for it is going to be less. And we've just published a couple of papers actually on the government debt outlook. The debt outlook for US or European governments is going to be to pay this debt down, not over years, but over decades. It's going to take a long, long time to go through that process. And that doesn't mean that we shouldn't be providing fiscal stimulus now, but it does mean that there's going to be a fiscal consolidation program that has to kick in within 3 or 4 years' time, and that's going to be there for a long time, and that is going to act as a headwind. So that is going to be something that encumbers those economies for some period of time. But, we can still see productivity growth within that, and clever fiscal management can still sort of see an adjustment come through. But no, I mean, undoubtedly, being able to control the virus in a better manner when it's hit will leave economies in a stronger position, and China is undoubtedly one of those economies in that place.
David, just a final one from me, if I may. Thursday, an ECB news conference with President Lagarde, widely not expected to do anything this time around. Pressure clearly building. David, what are you looking for in that news conference, that meeting this week?
We're really just looking for the usual ECB sort of tipping the nod to the next meeting, the next rendezvous. So we are expecting to see an extension of QE, both in terms of quantum and time. We think that the ECB will certainly roll out this QE support throughout most of 2021, and that announcement comes, we think, in December alongside the medium-term forecasts. But, to be fair to the ECB, that there is a question, why not just do it now? It's relatively obvious the direction of travel. But I think at the moment, the ECB will go into this meeting. They're not going to know about whether or not they've been ratified in terms of European national budgets. They're not going to know what the UK-EU trade deal is going to be, and they're not going to know what the electoral situation is, and therefore the economic background for the US economy. So there is an argument really just to hold and wait here and then react when there's more information in the bag, and that will be the case in December. But we very much expect to see an extension of QE to the tune of around 500 billion euros announced in December.
Just a cool 500 billion. David, thank you. David Page of AXA, thank you very much. Tom Keane, I've got no idea where we will be in that December meeting at the ECB. A month is a lifetime right now. How many times have we said that this year?
But we've shifted. You brought this up earlier, John, and on radio and television across this nation with this pandemic, there's a shift. Remember the certitude, John? It was like the first week of March. I was away the third week of March, and we were framed out. May 15th, we're in control. We're watching the news cycle. We're going out 6 weeks or 8 weeks. And then we were sort out this diffuse 3 months. Where are we now? And I would suggest, John, on the edge of nowhere in terms of how we're looking out.
Vaccine watch, Tom. End of November, start of December.
You said end of November.
That's what everyone's on.
Yeah, granted, there's a collegial debate about this, which keeps us employed. But come on, the vaccine is there, and then the distribution of the vaccine, knowing the first one won't be as efficacious as the third one.
Totally agree. And Lisa, weigh in, please. I think you agree as well. End of November, start of December is judging the efficacy of a vaccine. Have we got one? Yes, okay. Distribution, widening the access to that could be a Q1, Q2, Q3 story for all we know.
Yeah, and there's a lot of questions about how much the vaccine will protect people. I go back to what Tom Frieden said over the weekend, the former head of the CDC. He said the final stage of this coronavirus pandemic is acceptance. It's not going away for a long time, and trying to imagine life in a very different way going forward. Kind of sobering, John.
That's pretty miserable, actually, Lisa.
Anytime, thanks, John. I'm here for you. You want to get brought down?
I know.
Right here.
I know. That's what she's Monday to Friday. She's here for the depression. Okay. Thank you, Lisa. Alongside Tom Keane and Jonathan Ferro. Coming up, Rebecca Green.
Is it Leicester
William and Mary
or
Law
Lister?
School professor.
Leicester?
It's Leicester, Tom.
Leicester.
Why are we doing that now?
Leicester City.
Why?
Leicester. Okay, I
Leicester
just don't know how to
City.
pronounce
Leicester. You got
Leicester.
that? All right.
Yeah, okay, Leicester.
Well, that's that done. Anything else?
No, I just
Before I go? Okay, good.
Come back to it.
Go ahead, John.
All right. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi and the White House accuse each other of doing the same thing when it comes to a pandemic relief plan. And that is, quote, moving the goalposts when it comes to what's in the actual legislation. Pelosi says the House could pass a bill this week. Still, an agreement with the White House isn't certain, and the Republican-led Senate may not act before the election. Coronavirus cases are surging again in the two countries at the center of the initial wave of the pandemic in Europe. Italy is introducing its strongest restrictions since the end of the national lockdown in May, and meanwhile, Spain also will impose new measures, including a curfew. Joe Biden calls Republican questions about his son Hunter's business deals a smear campaign. The Democratic presidential candidate also told CBS News that the release of documents allegedly belonging to his son may have been part of a Russian disinformation campaign. Biden's claim has not yet been substantiated. More deliberate blackouts in Northern California. The state's largest utility, PG&E, cut power to 1.1 million people to prevent live wires from falling into dry bush and starting wildfires. Winds as high as 50 miles an hour swept through an area north of San Francisco. The blackouts may last until tomorrow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Democrats are the shutdown party. They will shut down your jobs, shut down your schools, your businesses, your police departments, your energy. They'll shut down your freedom, and they will shut down the greatest economic comeback in the history of our country.
You know, you'll be seen and you're heard and respected by me. Our campaign is a broad coalition that welcomes Democrats, Republicans, and Independents. If elected president, there will be no red states or blue states, only the United States.
It is that time of every 4 years, a presidential election, and of course 8 days away. You know it's going to be interesting with surprises over the next 8 days. David Weston leading our coverage, really looking forward to his work, not only on balance of powers, but some special efforts through the week. And of course, Kevin Cirilli, tanned and rested down in Washington, will give us his perspective as well. Right now is a great joy. If you go to a fancy school like Harvard and you get a bunch of fancy degrees, if you are ever so lucky, you get to go to the founding school. That would be William and Mary and their law school of 1779. It was an historic moment for the nation when a number of people, including Mr. Jefferson, got together and said, we have to be different. And they did that at William and Mary. Rebecca Green is at Williams and Mary. She is the winner of their acclaimed teaching award given by graduate students, and that is a good and wonderful thing. Professor Green, thank you so much for joining us on election transparency. Can our radio listeners, our television listeners, can they be confident of safety at the voting booth on November 3rd?
Well, first of all, thank you for having me. And second of all, absolutely they can. Election officials and local governments have been working hard to ensure that we have a safe and secure election.
There have been so many elections going back to the founding of William and Mary, 1800, particularly 1824, and then on to 2020, that are this fractious. Is it normal to be this angry where there's so much tension about our voting process?
I would not say it's normal. We certainly do have a long history of problems at the polls, but it is the case, I think, that we're in, a hyper-partisan mode, and, we certainly haven't seen anything like regular comments emanating from the White House that there's a problem with our election administration. So it certainly is a different tone than any previous election, at least in the modern era.
Rebecca, there's a question about November 3rd. It will be the last day of voting. And then there's a question about the weeks after that, as both sides of this campaign get their cavalry together to fight the legal foundations of this vote. What are some of the battles that you're expecting to see in the court based on both President Trump and former Vice President Biden's comments so far?
Yeah, well, so I think the first thing to say is that post-election litigation is normal. It's part of our system. It's how we resolve disputes, and this country has a long history of resolving post-election disputes in the courts. Post-election disputes are generally guided by state law, so it's different in every state how this will all unfold if it unfolds. There's kind of three different, there's different kinds of, there's different types of post-election litigation. So, everyone's probably familiar with recounts. When elections are close, candidates can call for recounts. And again, that process is governed by state law. And then there are ways that candidates and campaigns can challenge either, ballots, or they can allege official misconduct. It's called different things in different states, but it's generally a contest or a protest are the words that are most often used. And so those are the various vehicles by which you can, challenge or litigate an election result. And so we can expect, if it's close, we can expect to see, one or both unfold.
So there's a high likelihood that Amy Coney Barrett will get confirmed to the Supreme Court as soon as this evening, if she does passes through the Senate today. What's your expectation about a potential case that would come between the Supreme Court the way we saw back in 2000?
Well, I think it's pretty unlikely that we see a 2000-like, event. I mean, there would have to be a lot of circumstances that would coincide for that to come about. I mean, it's pretty extraordinary that the whole race came down to Florida, and that the race in Florida was 537 votes, spread. So I think, the chances of lightning striking again seem pretty remote to me. I think what's more likely is a case could end up at the Supreme Court that, deals with the fundamental powers of state legislatures versus state courts. That's a kind of, we've already seen a premonition of that with a 4-4 split last week on that question. And that could reemerge as, there are some unsettled questions about, authority in elections in states.
Rebecca Green, Brian Rosenthal and Michael Rothfeld in the New York Times this morning have an absolutely brilliant article on the nepotism involved. In this case, it happens to be, I believe, the city of New York election process and all that. How are we going to vote 5 or 10 years from now? Do you have, in your expert view, a better way we're going to vote than the nepotism and the local politics of this nation's electoral process?
Yeah, it's pretty extraordinary when we have foreign visitors come and look at our election system. They're often amazed that we have this very decentralized and sort of partisan-based election administration in this country. And it is, many volumes have been written about how problematic it is for a lot of reasons. But on the other hand, if you look at 2016 and hopefully in 2020, one of the features of our system being so decentralized is that it's very hard to do anything to harm it from the outside, right? Because you'd have to, there's essentially 10,000 different elections in this country. And so that kind of provides some protection in terms of the kinds of potential harms that we see. So it's sort of a two-sided coin. In terms of reform and like what we might, what changes we might have, 10 years from now, you could imagine after this insane election season that Congress decides to take a little bit more of a heavy hand in terms of mandating some certain basics in terms of how we run our elections.
This has been a joy. Rebecca Green, thank you so much. Professor Green at the Law School of the College of William and Mary. Lisa, -37. I'm going to say futures deteriorate out 2 big figures on the VIX.
Yeah, interesting to see what Greg Peters was saying, that the 60-40 portfolio is not dead, and you can see it today because you've got risk off in futures, but you also are seeing a bid into bonds, and this underscoring the conundrum that a lot of people have when arranging their investments.
Yeah, I'll say, and we heard that from Michael Swell of Goldman Sachs as well, with some enthusiasm there on the ownership of bonds, even at this yield. We must bring you up to date on the Turkish lira, out to new record weakness moments ago, 8.10 on the lira. That is a distressing statistic for Mr. Erdogan. Our Middle East team will have more coverage on that, including out of Istanbul, Owner Aunt and our team on Turkey, France, and the Levant. Please stay with us with futures at -36. This is Bloomberg Radio and Bloomberg Television.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the Open starts right now with 30 minutes until the opening bow. Futures down 35, we're negative 1%. We begin with the big issue. Infections climbing, restrictions intensifying, and stimulus talks reaching a stalemate. Europe clamping down amid record cases, with Spain announcing a nationwide curfew and Italy introducing its strongest measures since May. The US facing its own difficulties amid 2 days of record infections and stalling stimulus talks. With just 8 days until the election, Democrats and the administration spending the weekend accusing one another of moving the goalposts.
We don't even have the bill yet because Nancy Pelosi, and she's coming up, I know she can speak to this, but we've continued to make offer after offer after offer, and Nancy continues to move the goalpost.
We're waiting for the final.
Well, they said they would, and you're waiting to see it on paper.
They haven't yet. And also, same thing, they keep moving the goalpost. We want it the sooner the better, and that's why we're making concessions.
All of this adding up to a risk-off Monday morning to kick off the trading week. Bloomberg's Kaylee Lyons joins us now for more. Hey, Kaylee.
Hey, John. Well, that's absolutely right. Not a lot of good news happening over the weekend. In fact, worsening news as it relates to the pandemic, and basically no real news or progress at all when it comes to stimulus. As a result, when futures trading opened last night, it was a sharp leg lower, and it's just getting worse as the morning goes on and we head toward the opening bell. John, right now, S&P 500 E-mini futures off by around 35 points for the Dow, and NASDAQ futures down over 300 and 100 points respectively. And if these losses hold, it doesn't bode well for the week to come, because in 13 of the last 14 weeks, the direction the market goes on Monday is the direction it went for the end of the week. Now, as we know, John, we have to look at the bond market as well. We know the 10-year yield has been really in a trading range for more than half a year, really range bound since all the way back in March. It did look like it was staging a breakout last week, rose as high as 85 basis points, but it seems, at least for now, that breakout has failed. We come in around 3 basis points this morning as there is that bid for safety, though we do remain above 0.8%. And as it relates to the curve, John, as bets that a stimulus deal was going to happen were building, we did see that curve steepening, the spread between the 2s and the 10-year notes climbing as high as about 70 basis points at one point last week. But as those talks have stalled out, so has that steepener trade. The spread coming back in now around just 65 basis points. And of course, it's not just about stimulus, not just about the virus, but also about the election, John. It's a week from tomorrow, and the market is starting to factor that in as well, John.
That is the third time that 2's 10 spread has topped out at around 70 basis points. Katie, thank you. A couple of observations on this market about 27 minutes out from the opening bow. Yes, futures gap lower. Yes, there's a bid into the Treasury market. Katie ran through that beautifully. What I think is interesting about Europe at the moment is what is happening with Italian bonds. BTPs are not falling, they are rallying. That's good news for the continent at a really difficult time. The Italian bond market, resilient. The euro, 118.11, we break down just a little bit. I think it's been really impressive how resilient the euro has been. Weaker today, but still north of 118, even with everything that's going on. Can that continue? Today, dollar strength through G10, we're down by 0.4%. And here in London, the FTSE hammered, the energy majors, the mining companies, commodities struggling. WTI 38 handle, $38 and around about 80 cents. That's the story of the price action. Here's a take from Stuart Kaiser of UBS weighing in on the market action. He says the following: the cross currents of strong earnings, delayed stimulus, rising restrictions, the US election, tech oversight and stagnating economic data have held risk markets captive for the past 2 weeks. Stuart joins us now for more. Stuart, of those things that you listed in that quote, when will we resolve half of them?
We'll resolve the big one next week, hopefully, and that obviously would be a big step. You know, I think what happened, Jonathan, is a couple weeks ago, you just had a lot of good news priced in. You know, the market had begun to expect a very strong 3Q earnings season. We had been pricing, you know, very positive kind of stimulus outcomes, and since then, you know, with all those good news things, you know, fully priced, the market's now had to digest, you know, the other side of the ledger, which is, you know, delayed stimulus or things of that nature. So obviously earnings will be resolved. This is the biggest earnings week of the season. We'll get a lot of news on that front, and tech will be the focus this week. We'll have the election hopefully resolved next week, you know, God willing. And if you get those two big things out of the way, maybe we get some vaccine news, you know, by year end, and we'll have a whole lot more clarity on the path of the stimulus as those other dominoes fall.
That's the hope, I think, Stuart. And right now, the vaccine put seems to be the conversation amongst the equity bulls. At the moment, what we see playing out in Europe and potentially in the United States is this second wave building. And Stuart, I think a question we've got to ask and think about, does a second wave necessarily lead to a second dip? Do you think it does?
Look, this is a risk that we've been focused on probably for too long and to our own detriment, which is just that, as you get the second wave and as the vaccine gets announced, but then the actual wide distribution of it gets pushed out, it creates pressure on U.S. economic data and particularly on the employment side. So I think to the extent that you had a second wave and employment sentiment continues to struggle, that is something that could kind of push you a little bit lower. If you look back to over the summer, the blue wave was not necessarily considered the best outcome by a lot of equity investors. And over the last couple of months, it has become not only the best outcome, but almost a necessary outcome. And I think the thing that links that is the fact that we've seen U.S. economic data and the recovery start to slow, particularly on the labor side. So I think what could cause the viruses to drive another second leg lower would be we don't get enough stimulus and the U.S. Employment situation and outlook continues to deteriorate.
Do you think, Stuart, there's something that we need to think a lot more about is the potential for persistent fiscal failure? The happy talk around election scenarios seems to discount the possibility, or ignore it entirely, that we could have a situation after November 4th where we're staring down the barrel of political arguments well beyond the lame duck section and well beyond next year, where we just can't get it together and get another fiscal package together as well, Stuart?
Yeah, it's a huge risk in the sense that I think a lot of market participants, particularly on the equity side, not only are expecting but are demanding additional fiscal. And, the chance of the GOP Senate is probably a little bit underpriced, even though that is not the most likely outcome at this point, if you believe the various forecasting sites. But if that were to happen, then you're in a situation where you need fiscal and you have, a GOP Senate that could be a little bit resistant to that. Not that I think it'll go down this path, but if you think back to 2011, there was a lot of controversy over fiscal expansion and how to sort of control that going forward. And that led to a lot of political uncertainty in the U.S. and very negative, implication for equity markets. I don't think that's the case this time because I do think, the pandemic is a very broad-based existential issue that I think hopefully will allow people to, cross the political aisle. But if you were to come up with the negative scenario, it's that you get a very resistant GOP in terms of the size of the stimulus package at a time when, frankly, it's very needed, and I think also largely priced into markets. So if it's not rewarded, then markets are going to react, and they're going to be the forcing mechanism in that case.
Stuart, one thing we have seen over the last couple of months that perhaps not many people are used to is persistently high implied volatility at a time where the equity market has continued to rally. Stuart, is that something you think can continue?
We do think it'll continue at least through the election. I mean, 10-day S&P realized volatility is at 11 right now, and the VIX is near a 30 handle. So to your point, there's just a very wide gap between those two things. In the U.S. in particular, those gaps are extremely wide because, most of the risks that we're discussing are almost centered in the U.S. right now. So I think investors have just driven that premium wider. Our view, and I think the view of a lot of investors, is that implied realized spread is going to be pretty sticky. It probably won't be as wide as it is today because where we are is just, a little bit off the charts. But I think, going post-election, what you'll probably see is the VIX come down a little bit, the term structure steepen a bit, and those spreads compress a bit. But I don't think that's going away. And if you think of even back to last year during the trade war negotiations, you had fairly wide implied realized spreads, and you had a curve that was steep in the front, and then you had this sort of, high and flat plateau in the 4 to 6 month space. And as a base case, I think that's probably what the vol term structure is going to look like, going into early next year, with the caveat that, anything could happen. But, I think our view is you will get a little bit of a steepening of the term structure. Implied realized will compress, but remain, wide by historical standards. And you're going to have some risk premium priced into that belly of the curve because, similar to the trade war, this is a major event catalyst. You don't know when it's going to resolve itself, and you don't know in what direction it's going to resolve itself. And, without knowing the timing, magnitude, and direction of a catalyst, the vol marks are going to be forced to just leave a heavier premium than they might normally price in.
Stuart, before I let you go, I've got to put you on the spot. 8 days away, conviction trade going into the election. Can you have a conviction trade going into this election?
I think it's very hard to have a conviction trade. If you look at what the market's priced, the market is putting a premium on November puts and a premium on December calls. So they're worried about near-term downside risk, and then they're worried about that kind of upside in December if we do get that outcome. What I would say is, ahead of previous elections, The VIX starts to price its biggest premium a week to 10 days ahead of the election. And a number of investors we've talked to have said, we're not going to trade this until basically Halloween. So it wouldn't surprise me if people that are looking to put on hedges or directional trades are kind of waiting to the last minute until they have a better idea of what the cost is in terms of implied volatility and where the S&P is from a strike perspective. So it's very, very hard to have conviction, but what the market is telling you is kind of near-term risks and then medium-term upside if they get the outcome that they're demanding.
Hey, Stuart, great to see you, sir. Thanks for joining us. Stuart Kaiser there of UBS. 20 minutes out from the opening bell, equities near session lows, down 34 on the S&P. We're negative 1%. With your movers at the market desk, here's Abigail.
John, fitting to the risk-off tone for global equities and certainly the U.S. futures, SAP, the shares of the enterprise software company, are having their worst day in Europe since 1999, set to have something similar here in the U.S. This after the software company cut their full-year revenue view. They expect fresh waves of lockdowns to hurt demand, and the pandemic will also delay the company's goals around the cloud. And most painful about the reduction is for the first half of the calendar year of 2021. So they really see the pain extending, and you can see that stock absolutely punished. As for other movers, Dunkin' is popping to the upside. This on the news that they are in talks to be acquired by Inspire Brands. That is a private equity-backed company which also owns Buffalo Wild Wings, and they bought that company for a 20% premium. So you can see Dunkin' trading at almost a 20% premium. And then to the downside, the defense contractors. This, of course, as China is imposing unspecified sanctions on these companies to punish the U.S. for the $1.8 billion arms sales in Taiwan. So mainly movers to the downside, John, keeping with the bearish tone.
Abigail, thank you. SAP, just absolutely ugly. I caught up with the CFO earlier this morning. His words, not mine. He wasn't unhappy. They were comfortable with the direction of travel. I did ask how investors would feel about that statement, given where the stock was set to open in Germany, and he seemed constructive. Hey, look, I guess he's got to be, but that stock is getting absolutely crushed in Germany. Coming up on this program, Democratic nominee Joe Biden heading to Georgia with the polls tightening in key southern states. That conversation coming up next with SocGen's Sabaja Rajappa, and we'll touch base, of course, with Bloomberg's Kevin Cirilli. From London and New York this morning, good morning. Equities down, going into the cash open, futures lower by 0.9%. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
You have have a choice, New Hampshire, between a Trump boom or a Biden lockdown. The Biden lockdown would permanently destroy the lives and dreams of tens of millions of our citizens, wipe out what will be and what's turning out to be the greatest economic comeback of all time.
Our campaign is a broad coalition. It welcomes Democrats, Republicans, and Independents. If elected president, there will be no red states or blue states, only the United States.
Presidential candidates ramping up the rhetoric with just 8 days remaining until the election. The former vice president and his running mate campaigning across key southern states this week. Joe Biden leading off in Georgia, where polls are tightening despite voting Republicans since 1992. And look where Senator Harris is going, heading to Texas, hoping to flip another traditionally red state in the Democrats' favor. Kevin Cirilli joins us right now, Bloomberg chief Washington correspondent. Kevin, it's Texas which made the headlines over the weekend with that poll from the Dallas Morning News, 46-44 Biden. The average of polls in Georgia showing a tie. Kevin, there's a risk here, isn't there, that the campaign moves beyond the battleground states, the traditional ones, and starts spending a little bit more time in places like Texas, Kevin. What's going on?
Well, two things. First and foremost, the Democrats seizing upon the national poll momentum and trying to expand the map. You mentioned Texas. The average poll of polls has Joe Biden leading 48% to 45%, according to one poll that came out there. Of course, that is a deeply conservative state. So and really could be a bellwether of sorts on election night and in terms of the scope of a potential blue wave should Joe Biden defeat President Trump in the battleground and what now I guess is a battleground state of Texas. But the second point that I would make here is that I was just up on Capitol Hill speaking with Senator Kevin Cramer. He's a Republican from North Dakota who defeated a Democratic incumbent in Heidi Heitkamp back in 2018. I asked him how he did it. He said energy policy. It's how Republicans are trying to close the ground that they've lost to the Democrats on a host of different issues. And it's really the energy argument, Jonathan, that they are making in Michigan and Wisconsin and Pennsylvania, and yes, now including Texas. The bottom line, though, we're a week and 1 day out from the election day when upwards of 50 million people have already cast their ballots. So as Senator Kevin Cramer put it to me, does the energy argument work at a time in which many voters have already cast their ballot?
Is it working? Let's talk about, is it working? Never mind have they missed the boat already because so many people have already voted. We know for the last 2 weeks, 4 years ago, there was a huge momentum build behind the President of the United States, Donald Trump. This time around, we all get to see the same polls, Kevin. We don't see it. They seem to be confident their approach is working. What gives them that confidence right now, Kevin?
They have internal polls that suggest that Republicans are just as motivated, if not more motivated, to show up and vote on Election Day, and that they will turn out on Election Day, regardless of what's standing in their way, whether it be COVID-19 or any other issue. They also feel that issues pertaining to the Supreme Court will only further motivate many of their Republican base who quite maybe not are in the Trump base, but in the Republican base, who are motivated to show up as a result of judges. And of course, Judge Amy Coney Barrett widely expected to be confirmed to the Supreme Court sometime this evening, and that's still much moving along schedule according to the Republicans. So that is what they feel is going to help them. But I can tell you that, as is typical, and I'll keep this very short, as is typical in the lead up to an election, both the sides of the staffers are feeling that anxiety of what do they do next? We're playing the outcomes game for a week from tomorrow.
Kevin's so busy, we didn't even talk about the office of Vice President Mike Pence, which has got its own difficulties right now. Kevin, great to catch up. Also so busy that we didn't actually have to talk about fiscal stimulus talks this morning with Kevin just yet anyway. I mean, the short guide to all of this seems to be the distance between Senate Republicans and House Democrats was already wide, and the distance between the administration and Speaker Pelosi on two key issues, liability protection 1 and state aid 2, just hasn't seemed to close whatsoever in the last 30 days. And maybe that's one of the reasons equity futures are down 31 this morning and off 0.9%. Here's a take from SocGen's Sabadra Rajappa discussing how to position around the U.S. election. She writes the following: the yield on the U.S. 10-year is drifting higher, with increasing odds of a Biden win. With less than 2 weeks to the election, we are neutral on duration, but recommend positioning for high yields and steeper curves over the long run. Subhadra joins us now. Subhadra, your view on the election, do you think that holds the keys to whether we break out of this tight 10-year Treasury range we've been in for quite a while?
Possibly. I mean, I think if you get a Democratic sweep, there's a good chance that 10-year Treasury yields could sell off to perhaps 1%. But really, the struggle is going to be any sell-off beyond that 1% level, given the fact that you're having an increase in infections across the globe. Global inflation is quite low, so any sort of a sell-off risks sort of profit-taking from short positioning, as well as new investors coming in and taking advantage of higher yields to go long. So I think any sort of sell-off is going to be capped if there is a Democratic sweep after the elections.
That's the Treasury story. Let's pair the Bund story with that, not just the US politics, but what's happening in Europe at the moment. You think if there is a sell-off, Treasuries underperform Bunds? Now, Subhadra, people might look at the price of Bunds and say, look, negative 60 basis points, far more scope to sell off there in a German bond market. Why do you see things playing out a different way?
Well, because of the inflation outlook. If you look at Germany, not just Germany, but all of Europe, core inflation is very close to zero. So the key risk for the ECB going to this meeting is on inflation. Inflation expectations are very low. And what are they going to be able to do to prop up inflation? So in an environment where inflation is so low, I think it's going to be a struggle for bond yields to rise meaningfully. So I think we see more prospects, perhaps, for a rise in Treasury yields to be the catalyst towards modestly higher bond yields. But on the contrary, if you get sort of a resurgence of infections and bond yields remain low, then Treasury yields could rally and sort of come towards bonds. So this tug of war between the two continents is going to continue for the near term.
Do you think about that spread directionally or just in terms of a range, Subhadra? Right now, that spread between 10s, Germany, the United States, is about 140. What kind of numbers are you putting on that?
It's definitely directional, as in if there's a sell-off in Treasuries, you're going to see that spread widen, and then if there's a rally in global bond yields, you're going to see that spread narrow. So that directionality, I think, is going to broadly remain very much in play. The question is the Treasury yield going to be able to sort of break out of the current range? And given the fact that we're seeing a resurgence in infections in the U.S., I think it's going to be very hard to make the case that Treasuries are there's going to be sustained sell-off in Treasuries when bond yields are this low.
Subhadra, always wonderful to catch up with you. Fantastic to catch up on a Monday morning in the bond market with Subhadra Rajappa of SocGen. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. Then later, JP Morgan Stephen Parker joins us for the opening bout to preview a big week for tech earnings. That coming up and more in this market. 7-8 minutes away from the opening bell. Equities down in Europe. Really, really hard. On the equity benchmark in Frankfurt, Germany, we're down by 2.65% and recovering a bit. Equity futures down 31 and down 0.9%. Monday morning, 8 days away from an election, the eyes of the world, in markets at least and elsewhere, on Washington, D.C., and just a little bit of risk aversion to kick off the trading week. This is Bloomberg. 5 minutes out from the opening bell. Equities lower this Monday morning on the S&P 500. We are negative. We're down in Europe. We're off by 31 on the S&P. We're down 0.9%. That's the price action. Bit of risk aversion this Monday morning. Let's get you some morning calls to look at some of the analyst recommendations on Wall Street. JP Morgan and the team adding Lululemon to its analyst focus list, a 415 price target. The analysts seeing upside to quarterly results with a preferable setup for the second half of 2020. That stock positive 0.7%. The team over at Raymond James upgrading Toll Brothers to an outperform a $55 price target. The analysts expecting strong demand for new homes to continue boosting the company's sales of luxury buildings. That stock is negative by 2.36% going into the cash open. And your third and final call, it comes from Credit Suisse downgrading First Solar to underperform ahead of Tuesday's earnings. The analysts seeing limited tailwinds with the stock approaching peak multiples following its 180% rally from March lows. That stock is down by 1.8% going into the cash open. There are three of the calls coming up next. We're looking ahead to big tech earnings this week with JP Morgan, Stephen Parker. That conversation still ahead from London and New York this morning. Good morning. Equities lower. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
So in 8 days, we wrap up voting in the United States of America. In 9 days, you might find out who the president is going to be in America for the next 4 years. Maybe. It is the maybe that haunts this market. It's the maybe that shapes the volatility curve, as Stuart Kaiser of UBS pointed out, high and flat into year end. It's the maybe that is playing into a little bit of uncertainty with 1 week to go. Equity futures down 30. We're off by 0.9%. The story for Europe and the United States this morning, and good morning to you all. Restrictions across Europe, surging COVID cases again, and stimulus talks. What talk? Switch up the board in the bond market. Treasuries with a bid. Risk aversion. Building up a little bit of demand back into the Treasury curve. Yields coming down 3 basis points on the long end on 10s. We're back to 81 basis points. Crude lower. We head south. 38 handle just south of $39 at $38 and around about 95 cents. And in the FX market more broadly, stronger dollar story reflecting that diminished risk appetite. 118.20 on euro dollar, down 1/3 of 1%. A few days out, Thursday, ECB meeting, news conference with President Lagarde. It's got to be one of the biggest events on the schedule for this market. That's the price action. Your cross-asset movers at the market desk with your stock movers. Back with us, here's Abigail.
John, with today's bearish open, let's take a look at a number of names that are dragging on the major averages here in the U.S. Starting out with the shares of Hasbro. They don't have Barbie, and that's a problem. Mattel last week put up a great quarter, but not so much for Hasbro. They did beat revenue estimates, putting up $1.8 billion, but that's down 4% year over year, so it's just not enough. That stock down about 6%. JP Morgan is also lower. You were talking about that bid for bonds and this risk-off tone. That is weighing on the yield curve. Banks last week rallying, not so much today. Oracle down in sympathy with SAP taking down their guidance for the year, and in particular of concern is the fact that that includes the first half of calendar year 2021. The company saying that they see future lockdowns that will weigh on demand. Speaking of the virus, if we take a look at some travel and leisure movers, we are going to see more declines. This, of course, as we've had record numbers here in the U.S. back to back for 2 days, record numbers elsewhere as well. TSA airline check-in numbers are down, and Italy and Spain, as you were mentioning, John, restrictions tightening in Europe, getting close to lockdown level restrictions. So again, we have travel and leisure stocks down on this as folks are anticipating that there could be some more pain ahead around the virus.
Abigail, thank you. About 2 minutes into the session, let me run you through things sector-wise. Every single sector on the S&P 500 in negative territory. We're down 0.9% on the S&P. Bottom of the pile, the more cyclical parts of this market. Energy, materials, industrials, financials getting hit. Abigail mentioned the financials. Curve flatter. The bull flattener back into this market. That means financials naturally get hit as well. That's the price action of the moment. My producer, Jamie, this is his favorite week of the quarter, the busiest week of earnings season, where he gets me to stop talking macro and gets me to talk about individual names. 5 days, 185 S&P 500 companies, and a sizable dose of the mega cap tech names in the mix as well. Bloomberg's Sarah Ponzek joins us for more. Hey, Sarah.
Hey, John. It's not just Jamie's favorite week of the earnings season. Mine, too, and I think many others. It's certainly going to be a busy one. The third week of the earnings season and the busiest one. To this point, though, 85% of companies have beaten EPS estimates. Sure, it's relative, but even with that high beat rate, it's not acted as a boon to share prices. Since JP Morgan and the big banks kicked off the earnings season, the S&P 500 has fallen, and we do see shares lower yet again this morning. This is S&P 500 performance since that day that the banks really kicked off earnings, so down almost 3% or so. But not only are companies that are beating not being rewarded, companies that miss are being severely punished, according to Wells Fargo Securities. So Chris Harvey over at Wells Fargo Securities has tracked this data since the beginning of 2015. Well, this quarter, if you miss EPS estimates, you have seen your shares fall 4.4% on average in the day that followed. That is the worst performance ever. At the same time, just about double what the historical average has been. Now, companies that beat have fallen about 20 basis points, 0.2%. Meanwhile, in history, when we've seen companies beat, we've actually seen a gain of 0.7%. So companies are falling. JP Morgan says this is just because, as you mentioned, the election upcoming 8 days, that is really taking precedence over the earnings season. However, if this price action does remain, it will have very large implications for this week because it is going to be a doozy. As you mentioned, 185 companies, that's about $15 trillion worth of market cap, about half of the S&P 500's market cap. Tomorrow, we have Microsoft and Pfizer. Wednesday, Visa, MasterCard. Thursday is really going to be that big one. We have Starbucks and Twitter, and add to the list, Facebook, Amazon, Apple, and Google. It's going to be a very busy afternoon after the bell on Thursday, John.
I'm looking forward to it too. I promise you, Sarah. Thank you. I mean, naturally, it's my job. I've got to look forward to these things. Sarah Ponczek, thank you very much. 5 minutes into the session, JP Morgan's Stephen Parkner seeing an unenthusiastic reaction to earnings, writing, quote, of the 14% of the S&P 500 companies that have reported earnings, a remarkable 85% beat consensus EPS expectations. While this seems like great news as the economy continues to recover, expectations are coming from a pretty low bar. Even with these beats, less than half have had positive price action. This playing into the story that Sarah described just moments ago. Stephen joins us now. Stephen, by definition, there is information in news. For market participants, there is more information in how markets react to that news. What's the information takeaway you take from this right now?
Well, I think what we're seeing, and particularly the reaction to the fact that while almost 85% of companies are beating, we're not seeing the positive reaction, tells me that the analyst estimates are probably still a little bit lagged. We haven't gotten to the right place yet, but markets have set a higher bar than what those consensus numbers might mean. Now, I think that's particularly relevant for the parts of the market that have done so well. So think technology, think other types of growth stocks, where in my mind, coming into this earnings season, the bar certainly is higher. And while we expect strong results this week, we think we're in a period of consolidation for the market. What I think will be more interesting is when you look at some of the sectors that have lagged, so think banks, industrial, some of the more cyclical parts of the market, where I do think the bar is still a bit lower. Are we going to see signs this quarter that some of that cyclical recovery may be beginning to take hold?
Well, Stephen, on the other side of this, it also raises a different question. What we're seeing play out in Europe right now in European equity markets is a story of more restrictions and higher COVID cases. The risk, I think, that people are discussing even more so, not the base case perhaps, but the risk certainly, and a downside risk at that, is that the cases pick up in the United States again, consumers disengage, and it weighs on growth. In that scenario, Stephen, given where things are priced, given where expectations are set, which part of this market is more vulnerable?
So I think first thing we have to keep in mind, Jonathan, is yes, we're seeing a tremendous pickup in cases, not just in the U.S., but in many places around the world. We're also keeping a close eye on mortality rates. Obviously, we're in a much better place to treat this pandemic now than we were earlier in the year. And I think watching the fact that those mortality rates remain low is probably something that will keep the consumer more engaged in the economy. Now, clearly, if we see a big pickup in both cases and mortality and concerns around a slowdown, even with the higher expectations, I think consumers are going to, and investors are going to continue to look at the secular growth beneficiaries of what's going on. We've seen it with tech this year. That digital evolution continues to push forward, and even though valuations may be a bit elevated, we think that that's going to be the first place that investors look, particularly when you think about the $20+ trillion of assets sitting in money market funds and deposits today. The first place that that will go back to work if we see a pickup again as it relates to the pandemic is likely to be technology and growth.
So, Stephen, that's the downside risk. Let's think about this. I think we're always looking for that inflection point, that internal rotation. A lesson, I think, for a lot of people that they struggle to really get their hands around. I talked to Hugh Hendry briefly about this, a former hedge fund manager, last week. The ability to stick with what's working, the confidence just to stay with what's working. Stephen, why not just stay with what's working right now?
You know, let me tell you kind of what we're telling clients today. One, sure. when we think about the things that have worked, so technology, secular growth, those are a huge part of our clients' portfolios. That was the first place we were allocating back in March and April. I think when we've seen the tremendous performance dispersion this year, even for clients who did nothing, those winners are now a much bigger part of their portfolio, just given how much they've gone up. So what we're saying is be disciplined, think about locking in some gains, rebalancing. We still like these winners over the next 5 to 10 years. It's where secular growth is going to be in a low growth, low rate world. But as you're taking some of those gains, think about reallocating a little bit to some of the laggards, whether that's cyclical areas like industrials, dividend growth strategies. I think that investment discipline is key to the long-term success in building our portfolios.
Stephen, great to catch up. As always, it's like being a therapist for clients sometimes. Stephen Parker of JP Morgan. Thank you, sir. About 9 minutes into this session, a little bit of relative outperformance on the NASDAQ. Stephen and I just talking about that. Down 0.4% on the NASDAQ. The S&P 500 off by 0.9%. SAP, German software company, that stock absolutely hammered, and I mean that, down about 20% at one point in German trading. The DAX really underperforming, off by 2.7%. More broadly, though, more restrictions in Europe. The outlook for the economy not doing great. The outlook for that company not great either. So that's the setup in the equity market. Weighing on the financials, Abigail touched on this. The bond market with a bid at the long end. 30-year yields coming down 4 basis points to about 160. On 10s, we have a rally there as well. Story of the bond market behind us, in front of us, Abigail Doolittle to get us some more movers. Abigail, bit of risk aversion this morning.
Certainly some risk aversion. A lot of it has to do with the virus. And on this, let's take a look at some virus-related movers specific to healthcare, because we do have the shares of AstraZeneca actually moving to the upside as their vaccine candidate has produced an immune response in older adults. So that's clearly seen as a positive. And Moderna is popping higher in sympathy as the idea that perhaps their vaccine will be approved at some point soon. Pfizer, they are having investors a little bit nervous. They, of course, report tomorrow, but with just 5 days left, investors are, again, getting a little bit anxious about when the vaccine results that are due out this month will actually be out. And then finally, Procter & Gamble. It's sort of interesting, John. Those shares are down about 0.7%, despite the fact that their new Lysol competitor has received EPA approval. So 2 winners there relative to the virus and the fight against the virus, of course, as it is really reemerging, especially here in the U.S. with 2 back-to-back record days.
Abigail, thank you. 11 minutes into the session, keeping an eye on the NASDAQ right now. Just stocks starting to come back a bit, particularly on the NASDAQ. Only 11 minutes in, already raising a lot of the losses this morning on the NASDAQ. We are down by about 1/3 of 1% there. Coming up on this program, pressure at the ECB meeting on Thursday amid rising infections and renewed restrictions. That conversation coming up shortly with Morgan Stanley's Brian Weinstein, and a recap to get you the highlights of what is happening on the continent all over again, unfortunately, in just a moment. This is Bloomberg.
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government because there are no checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election. So were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new turn. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterized the first.
It is Monday morning. Good morning. 15 minutes into the session, we're down 1% on the S&P. Some relative outperformance on the Nasdaq. That defensive posture back again. Big tech outperforming on a relative basis. A bit into the bond market. A stronger dollar capturing that risk aversion this Monday. Off the back of no stimulus talks or a breakdown in stimulus talks. And this. Fresh outbreaks of the coronavirus spreading throughout Europe. The WHO urging government leaders to action.
The next few months are going to be very tough, and some countries are on a dangerous track. Too many countries are seeing an exponential increase in cases, and that's now leading to hospitals and ICU running close or above capacity, and we're still only in October. We urge leaders to take immediate action.
The region moving a step closer to the strict rules imposed during the initial wave, with Italy and Spain edging closer to a lockdown-level curves. The Spanish health minister saying, "We will face very tough weeks. Let's not fool ourselves. This is how it will be. It's not a threat, it's reality." ECB President Christine Lagarde likely discussing the resurgence in Frankfurt on Thursday as clouds darken over the euro areas ahead of the central bank's rate decision. Bloomberg's Guy Johnson joins us now from London. Guy, great to catch up with you. This story in Europe is just not looking good right now, is it?
No. Governments will never talk about the fact that we're heading back towards national lockdowns, John, but by stealth, that is ultimately what is happening here. Spain over the weekend declaring a state of emergency. That feels very much like it did earlier on this year. You've got Italy closing bars and restaurants at 6 p.m. Local curfews are in place. The health minister here in the UK, Matt Hancock, over the weekend, refusing to rule out a further tier. At the moment, there's 1, 2, 3, with 3 being the highest in terms of the restrictions. He's refusing to rule out a 4. So we're certainly moving back in that direction, John, and the data certainly is also turning for the worse as well. You saw the EFO numbers out a little bit earlier on from Germany, particularly the forward-looking component there, very weak, and that will be a cause for concern. Angela Merkel talking about the virus being on the verge of being out of control in Germany. So all things are looking fairly difficult at the moment for Europe, as that chart in front of you really depicts quite clearly. And that poses some big problems for Christine Lagarde, John. The consensus at the moment is that she waits until December, until we get the staff projections, before there is any further addition to the easing that has already been delivered. But the expectation is growing, obviously, that we could see more in terms of the PEPP program, and that we could see further buying. On the one hand, and I sound like an economist here, John, you've actually got peripheral spreads behaving really well. Italy's trading 128 over Germany. You've got a similar story as well in Spain. And also the euro's behaving. But on the other hand, you've got this fresh wave, John.
I'm with you, Guy. I think the really good news is we're talking about a breakdown of the European recovery and not a breakup of the Eurozone, a problem that Christine Lagarde right now really doesn't need. Guy, great to catch up. Much more still to come with Guy Johnson and Alex Steele in around about 12 minutes' time right here on Bloomberg TV. Elsewhere, the story for Europe, well, that continues in this bond market. Try and get your hands around it. Morgan Stanley's Brian Weinstein joins us now for more. Brian, great to catch up with you, sir. Can we just touch on Europe just briefly, if we can? Your thoughts on what on earth is going on at the moment with the economy, and how insulated do you think this market is?
You know, the economy in Europe, it just seems to just stay weak no matter what, and it's surprising that the ECB would wait, although it does seem like they will. You can see it in the performance of the equity markets, but if you look at fixed income, people have really pushed yields on corporate spreads in Europe in line with other markets. So the fixed income markets don't share the alarm that the equity markets share about the direction of the European economy.
Is that something that persists in your mind, Brian, or something you want to reduce your allocation to?
I think it persists. I think it's a matter of time, right? Everyone knows there'll be more stimulus. And again, the bond market is so starved for yield and income. There are certainly pockets of places where I think you want to pull money back. But broadly speaking, our clients know that they need to find income, that these central banks will act, that governments will continue to act, maybe at a slower pace than they'd like. But we don't see a lot of people selling yieldy assets so long as they're in a place where there will be stimulus.
If you had to nudge them internationally, Brian, would you be steering them away from Europe and towards Asia?
We like Asia, and you can certainly get more yield there in pockets. So yes, I think broadly you can find now opportunities away. Europe was cheap for a while. It's not obvious that it's the market you need to look at right at this moment. That's probably fair.
Brian, I'm spending a lot of time talking to people trying to work out just how insulated this credit market is. If we don't get a fiscal package in the United States, if there's some kind of political outcome in America that leads people to capitulate on the idea that it's coming soon, how vulnerable is this credit space? And the reason I ask this is because do we really believe that monetary policy can keep financial conditions uber loose on its own?
No, we're at the point now where we're going to need, beyond monetary, we're going to need fiscal stimulus. So the market is certainly vulnerable. But let's not forget, there are some cross currents away from the political news, right? You could get a vaccine announcement or some type of announcement that makes the forward outlook better. But you're right. We think the biggest problem right here is that if you do get a split between the presidential party and the Congress, and you end up with more gridlock, that the market is not set up for it. So pulling back a little bit on risk here makes some sense. Yields have moved 20 basis points higher, not a lot, but certainly you could take off some of the underweight and duration positions or overweights in credit. But remember, the market continues to be short things that have yield, and we wouldn't want to get underweight risk. We would just want to be buyers of dips and have a little bit less risk than we've had on.
Brian, great to catch up, sir. To get your thoughts on the program. Come back soon. Ahead of that election, Brian Weinstein, 8 days away. 21 minutes into this session, equities down 1% on the S&P. Some real relative outperformance on the Nasdaq with the sector price action. Here's Abigail.
John, well, there certainly is a bearish tone this morning, carrying right through from last week. The S&P 500 falling last week for the first time in 4 weeks. So we see that selling pressure continuing on a combination of factors: the virus, the trade war reemerging, of course, uncertainty around the election. It is showing sector-wise. If we go into the Bloomberg terminal and use the IMAP, all 11 sectors are lower, so folks want out of stocks. But you're talking about that relative outperformance relative to the Nasdaq. That is all about consumer discretionary. Think Amazon, communication services, think Facebook and Google, and then tech, of course. That's one of the defensive areas this year. So those sectors are down the least. What we have down the most, though, the cyclical and the reopening trade. All of those sectors, real estate, materials, financials, industrials, energy, all down more than 1%. This is a microcosm of what we have happening on the year, John. If we take a look at the sectors on the year, the outperforming sectors this year are tech and consumer discretionary. The worst sectors, basically both in a bear market, the financials as yields fall, and then energy down more than 50% in sympathy with oil. So that's the tone on the year. It's the tone on the day, and it's certainly risk off. Although on the year, of course, you do have stocks a little bit higher.
Defensive to kick off the trading week. 8 days to go. How many times will you hear that today? 8 days to go. Abigail, thank you. Coming up, the market-moving events you need to be watching. That'll be next in our trading diary. In your market right now, 23 minutes into the session. Equities lower to kick off the trading week. 8 days to go. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
"25 minutes into the session, here's the equity market, down 0.9% on the S&P, just down 0.2% on the Nasdaq. We're back to that story again. That's the equity market. Here's your trading diary. New home sales coming out at the top of the hour. President Trump speaking in Allentown, Pennsylvania at 11 a.m. Eastern, his first of 3 rallies today alone. Wednesday, the CEOs of Twitter, Facebook, and Google testifying on Capitol Hill. All 3 of those companies, plus Amazon and Apple, reporting earnings on Thursday. Some brilliant coverage lined up right here on Bloomberg through the week as we count you down to that event. Plus, a BOJ and ECB rate decision coming up too, and US GDP, and another round of initial jobless claims. So quite a week at the back end of the week, and more campaigning to come. 8 days away. Let's get into price action. 26 minutes into the session. Equities just a little bit lower, down 0.9%. I say a little bit on the Nasdaq, down by 0.2%. The pain in Germany, SAP hammered. That does it for me. This was the countdown to the open. Catch me on Twitter at FerroTV. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, capital I say, 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统基础，这方面确实比你早。但是玩信息玩软的，中国的脑袋绝不比你们差。我们在座的所有人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions. and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.